Yo, what is up, everybody? Welcome to the Dream Huge podcast, man. Super excited for this one today. Folks, we love to share success stories from huge dreamers, folks in the real estate business, entrepreneurs, movers, shakers, influencers, and more. And hopefully these stories can help to motivate and inspire you to also dream huge, baby. So today we have my man JP for John Pavlansky, top producing agent in the whole board of Mansfield.
Woo.
In only his how many years doing it?
2 years.
2 years in and number one already, baby. Shout out JP. How you doing, my man?
Pete, I am doing fabulous, my man. I cannot complain. It is a Monday after a holiday. We're all kind of getting our grogginess back out of us, right? We're trying to open the eyelids real wide, wipe the crust out of our eyes. But it's been a terrific day, and I cannot wait for this pod. But I do have one question, though. Pete, how are you doing, my man?
I'm excellent as always. Hit the ground running today. We've got our very special guest, Brent Kesler, the Money Multiplier. So, Brent, let's talk about what you do at the Money Multiplier, man. Everybody wants to know, how can you help us multiply that money, baby?
Yeah, absolutely. Pete and John, thanks for having me, man. So grateful to be on. So anyway, the name of my company is called the Money Multiplier. We're located down here in a town in Port Orange, Florida, right next to Daytona Beach, about an hour east of Orlando. And the thing that I do is I teach this thing called the infinite banking concept, how to become your own banker, how to build wealth through your own debts and expenses that you already have, how to recycle and recapture all that money that has been leaving your family forever. I've been teaching this concept for 12 and a half years. I probably do about 50 to 70 live events a year all around the country, another 100 to 120 Zoom events and podcasts, kind of like what we're doing here. So anyway, just to give you a bit of my backstory, I'm actually a chiropractor. I own 5 clinics in the Kansas City area. I no longer practice chiropractic. I haven't practiced actually in a clinic since 2008. I sold my last clinic back in 2017. But so the concept that I teach, anyway, I was at a chiropractic conference back in 2006. So I was at a seminar and I heard somebody talk about this banking concept, how to build, keep, and create wealth, how to become your own banker. And I thought to myself, this is really, really cool, but it just sounds too good to be true, right? I'm sure you guys have seen things like that where it sounds good, but it just seems too good to be true. So I thought there had to be a catch to this. So I heard the information. I went back to my chiropractic life and did nothing with the information that I heard, nothing at all. I go back to another conference about 2 years later, and about 10 or 12 of my chiropractic colleagues that were at that previous conference with me are now at this new conference. Now, the only difference between them and me is when they heard the information originally in 2006 the first time, they implemented it and they acted up on it. So here I got all these guys, all these colleagues, guys and gals, they were just coming up to me and they were like, Brent, isn't this banking concept the most powerful thing ever to build wealth, to pay off your debts, to recapture, recycle money? They were basically throwing up all over me about this concept. So I thought to myself, there has to be something to this, right? There's no way 10 or 12 of my colleagues are lying. Maybe 1 or 2, but not 10 or 12. So I came home. It was February of 2008. And I told my wife, I said, honey, we have to start implementing this concept in our life. Now, it was at that time, Pete and John, February of 2008, I was $984,711 in debt. That's what I owed to the third-party creditors. Now, I know what you're thinking. You're thinking, well, how do you know that exact number? Well, that was part of the exercise. I had to know what that exact amount was. And you're thinking, well, how are you almost $1 million in debt? Now, I know if you live, right, so for example, if you live somewhere like in Southern California, right, that buys you a very small house for $1 million. But at the time I was living in Kansas City, and you can buy a lot for $1 million in Kansas City. And I'm sure you could buy a lot, the same thing, P, in Mansfield, Ohio for $1 million. You can buy a lot of stuff, right? So how was I in that debt? Well, I had the house that I lived in. I had my chiropractic clinic. I had two at the time. I had my student loans from chiropractic college. I'm an airplane pilot, so I had to have my own airplane. I had a house on the Lake of the Ozarks between St. Louis and Kansas City. And if you have a house on the lake, guess what you have to have? A boat and a wave runner, right? Yeah, man, you can't have a house on the lake without a boat and a wave runner. So it didn't take me a lot to become almost $1 million in debt. I was able to apply this concept that I learned, and I was able to pay that debt off in 39 months, 3 years and 3 months. And all I did was I added one step in my financial life. I didn't have to work any harder. I didn't have to change my cash flow, take any additional risk, or lose control of my money. I just simply added that one step in my financial life. I became really passionate about it. So I said, man, I'm going to start teaching this concept. And now I've been teaching it since March of 2012. So about 12 and a half, almost 13 years now, I've been traveling around the country and teaching the concept. But I want to be clear. The concept that I teach, I didn't create it. I didn't invent it. There's a book here called Becoming Your Own Banker. And the guy that wrote this book is a guy named R. Nelson Nash. Now, R. Nelson Nash was my mentor. Now, he passed away in March of 2019, about 5.5 years ago at age 87 years old. But this guy totally changed my financial life. This is a book that you and all your listeners want to add to your wealth building library, Becoming Your Own Bank. And again, I just took what he taught me, and I've just been carrying on his teachings and his legacy. I wrote a book about 4 years ago called Mapping Out the Millionaire Mystery. Now, I wrote this book with a guy named Chris Naugle. Now, a lot of you guys in the real estate world may know who Chris Naugle is. He lives up in Buffalo, New York. If you don't know him, go Google chrisnaugle.com, Naugle. But Chris and I wrote that book. Chris has had a couple real estate shows on TV. There was one on House Hunters. There was another one on HGTV called Risky Builders. So Chris and I wrote that book together, Mapping Out the Millionaire Mystery. And I'm going to offer, Pete and John, all your listeners, I'm going to offer you them this book. All they got to do is just, send me an email, Brent, B-R-E-N-T, Brent at themoneymultiplier.com. Go to our website, www.themoneymultiplier.com. So THE, moneymultiplier.com. And I'll send you the ebook version of that book, Mapping Out the Millionaire Mystery. I mean, and again, like if you really want to buy it, you can go on Amazon and buy it. There's an audio version on Amazon, but you don't need to go and buy it. Just let me send you the ebook version of it, and then you'll have it.
Beautiful. Beautiful. Woo!
JP, what you got for that, man?
So, first of all, Pete, do you have $1 million in debt?
Oh, yeah.
Million, right? I'm $1 million in debt as well. And Brent,
mine's more good debt, less consumer debt.
Good debt. Yes. Yeah. But Brent, I think the one question from everything that you just said is, so what exactly is the infinite banking concept?
Yeah, absolutely. Well, anyway, just to give you a 25,000 foot view, the infinite banking concept is a process to build, keep, and create wealth through your own debts and expenses that you already had. Because see, here's what people do. So anytime they go buy something, what they do is they take their money and they exchange it for the product or service that they buy. Let's say, for an example, a car, right? So like, how do you buy a car? Well, again, all right, John and Pete, I don't really know you and I don't know your listeners, but I know how you buy a car. You buy a car one of three ways. You either pay cash for the car, you bank finance a car, or you lease the car, right? Because I know you guys are honest and you didn't steal the car, yeah? So the thing you had to do is you had to give the money to the car dealer and he gives you the car. So he's got the money, you get the car, transaction is over, everybody goes home happy. But how about if there's a way that you can add one step into that process, and not only do you get the car, right? So the thing you do is you give the money to the car dealer, they give you the car, But now there's a process, a system, a method, a concept to get all of that money back for the car. So not only do you get the car, but you get the money back as well, right? So that's what I teach you, is how to recycle and recapture the money. Now, how do we do that? Well, again, the big 25,000 foot view is, what is the product or the process that we use to do this? Now, I'm about to tell you this, and a lot of people are going to tune out. Maybe even you guys will tune out after I tell you this, because you guys are going to like, what? There's no way. I know everything there is to know about that, and there's no way you can build wealth this way. Well, the process and the product that we're going to use to build wealth and to pay and buy all of our products and services that we're going to buy the rest of our lives is by using, get this, here it comes, a whole life insurance policy in a mutual company that pays dividends. Now, what did I just say there? I said that bad word, whole life insurance, and I can see people right now tuning out. I see there's somebody walking the dog, burping the baby, exiting, like, let me exit. How do I exit this meeting right now, right? Because you heard the word life insurance, and there's no possible way that you can build, keep, and create wealth through whole life insurance, because Dave Ramsey and Susie Orman told me it was impossible, right? Well, let me just tell you this. You do not know everything there is to know about this concept, because if you did, you would be implementing it in your own life. Don't take my word for it. I want you to go research what the wealthy have been doing for over 250 years. I want you to research the Rockefellers, the Rothschilds, the Morgans, the Stanleys, the Barclays. Go research how Walt Disney built Disneyland, how Ray Kroc started McDonald's, how Pampered Chef got started before Warren Buffett bought Pampered Chef. This is the process that they use. This is what Robert Kiyosaki talks about in his book called Second Chance. The exact concept I teach, Robert Kiyosaki, who everybody knows from the book Rich Dad, Poor Dad, he also wrote a book called Second Chance. He talks about exactly the concept that I teach. There's another guy, Tony Robbins. A lot of you guys may have heard of Tony Robbins. Tony Robbins wrote a book called Money, Master the Game. In chapter 5.4 of that Tony Robbins book, Tony Robbins talks about exactly the concept that I teach. But the problem with Kiyosaki and Robbins and how they wrote it in the book is they make it too complicated and difficult for people to understand. So when you read through the material, you read right through it and don't really understand what the meaning is and what they're talking about. So I break it down in a very simple, easy to understand way, right? Now, I have, so like on our website, which is called themoneymultiplier.com, I have a 90 plus minute presentation that you can go watch. It's broken down into 10 sections if you want to watch it a section at a time. But I go into detail on how this process works. For example, I show you how every car that you're going to buy for the rest of your life going forward, not only do you get the car, but you're recycling and recapturing the money. So you get the money and the car. Also, when you watch that presentation, you will see how I paid off almost $1 million of debt in 39 months and never changed my cash flow while doing it whatsoever, right? So I go into that into great detail on that presentation. But the big picture is it's done. The product that we're using is a whole life policy in a mutual company that pays dividends. Now, why are we using a whole life insurance policy? See, a lot of people think they know everything there is to know about whole life insurance, but let me be clear. This is not any type of life insurance policy. No. This is not the policy that you can go buy from your brother-in-law that sells life insurance. We all have a brother-in-law that sells life insurance, right? It's not that policy. It's not a term policy. It's not a variable policy. It's not a UL. It's not an indexed universal, an IUL. This is a specifically designed, specially engineered whole life insurance policy in a mutual company. Very important, in a mutual insurance company that pays dividends, that is designed for high immediate cash value. One more time. High immediate cash value. And what does that mean? That means when you put money into the policy, you immediately, and my definition of immediately is within 30 days, you immediately have the cash value to access from that policy to go out and buy the things you're going to buy in life anyway. So that's all we're doing, is adding one step in your financial life. Now, I'm not here to sell anybody anything, or I'm not even here to convince you. You just have to keep an open mind and realize, well, wait a minute. There might be something to what Brent is saying here. Maybe I don't know how money really, really works. Let's go do a little bit more research. Because never, ever, ever am I going to sell you anything. You're never going to buy anything from Brent Kesler. If you decide to implement this concept in your life after you learn and research more about it, hopefully you'll do it with us here at the Money Multiplier. You don't have to. You can go out and do it with someone else, but hopefully, and since you learned it from me, that you'll come and you'll do it with us at the Money Multiplier. Now, I know what people are thinking. They're thinking, well, Brent, if there's nothing you're selling, how do you get paid? Well, if you decide to implement this concept, and if you do it with us, guess what you're going to do? You're going to buy a life insurance policy. You got to go buy the life insurance policy from somebody. So hopefully you're going to buy it from us at the Money Multiplier. Well, you are never going to pay me a dime. See, I get paid one way only. I get paid the same way your car insurance gower gets paid. So when you go to John Smith, the Allstate man, to buy car insurance, the check that you write is not to John Smith. You write the check to Allstate, and Allstate pays John Smith a commission. So I am a licensed life insurance agent in every state of the country. So when you buy a policy and I'm your agent, the insurance company will pay me a commission, just like when you go to John Smith to buy your car insurance, Allstate pays John Smith a commission. The good news is that I don't determine how much commission I get paid, and you, the client, doesn't determine how much commission I get paid. The insurance company determines that amount.
Hey, Brent, how much money do I need to have this work benefits for me?
Yeah. So let me tell you this. I have over 17,000 clients in every state of the country. Okay. Go Google my name, Brent Kesler, Kesler with one S. Go Google the company, the Money Multiplier. The thing that you will see is you will see plan designs, case studies, success stories, testimonials. There's hundreds of them out there. You could search for days and see all the content that we've put out there. Now, out of all those clients, probably the client that has done the less amount of premium, meaning you decide how much money to put in the policy. I think the lowest premium amount is $40 a month, and our biggest client puts in $540,000 a month. So you pick a number between there, Pete. You pick a number, whatever you want to pick between there, right? Now, it doesn't matter if you pick the lowest amount or the highest amount. Your policy is going to work the same for both individuals. The only difference is the amount of money that you have working, right? One's going to be the lower amount and one's going to be the bigger amount. Never, 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 me or anybody on my team have we ever told one client ever how much money to put in the policy. You make the decision of how much you want to put in. You make the decision of how often do you want to pay the premium. Do you want to do it monthly, quarterly, twice a year, annually? You can always lower the amount. You can always change the mode of how you're putting it in. It's very flexible. You decide the amount and how much that you want to put in. I'll tell you my scenario. When I first started my first policy, remember earlier I said it was in February of 2008? I put in $2,000 a month into the policy. I didn't have all $24,000 to put in one lump sum. So I put it in $2,000 a month. And I was like, wow, this is working really good. So then I put in another $2,000 a month, and then another, and then after that, 4, and then another 4. Fast forward now, back from like February of 2008 till the end of 2024. We're sitting here now almost 17 years. I now have 28 policies, and I put in over $1 million a year into my policy premium, and I buy at least one new policy every 1 to 2 years. And the reason we continue to buy more policies is because of the way we design the policy. Is it's this thing where we bump it up against what we call the MEC limit, MEC, which stands for Modified Endowment Contract. Now, our good old government came in back, I believe, in June of 1988, and they put in this thing called the MEC limit because all these people were trying to stuff all this money into their whole life policies. And of course, anything that works good for the consumer, the government comes in and says, let me get a piece of that and let's stop that right now because we don't want to continue to have good things for the consumer. So they came in and they placed this thing called a MEC limit. And now anytime you put money into a policy, it can only rise to that MEC limit because the MEC limit says your policy is a contract. And if you try to overfill the contract, it's no longer treated as a contract. It's treated as an investment and it's subject to taxation. Well, we bump it right to the MEC limit. So there is no taxation because every dollar that we put in to a policy is with after tax dollars, which is a great thing. And we can explain and talk about that in another time, but it's with after tax dollars. And once your money is in there, now that money is all growing and compounding in a tax-free growth environment, and the government is completely out of your hair. And there's guaranteed growth each and every day, each and every month, each and every year. That's not me telling you that. That is in your contract. So before you ever sign, accept, and pay for a whole life policy, make sure you see in the contract where it has guaranteed growth. It can never go south. It can only go up. Only one way, and it's guaranteed to go up. But to answer your question, Pete, it's totally up to you how much money that you want to put into it.
I think it's, for me, it needs to be a substantial enough amount to where I'm going to be able to borrow from, correct? I mean, because that is the end concept here is you're going to borrow from your own fund,
yes,
and then repay that back with interest and pay yourself back with interest, essentially, right?
Yeah, that is exactly right. The only thing I'm going to correct on what you said is when you're borrowing the money, okay, all the dollars that you're borrowing, all the dollars you're pulling out of the policy, it's not coming out of the policy. What you're doing is you're putting your policy up for collateral and you're taking a loan from the general fund of the insurance company. So get this, all your money is still in the policy, growing and compounding tax-free, and you're using the money at the same time. It's uninterrupted compound interest. So you're using the money and it's all growing because it's all in your account. And yes, even though you're right about you always want to pay back your policy loan, just like if you would go borrow money from a bank, you're going to pay them back. You're never going to skip a beat. But you don't have to pay back your policy loan. No. It's not required because a policy loan is simply a prepayment of the death benefit. So what you're doing is you're borrowing against the death benefit. How cool is that? So the thing that you're doing is you are using a portion of your death benefit while you're living. So that's what you're doing. You're using a portion of your death benefit while you're living instead of letting that death benefit accumulate and then all of a sudden you die, pass or graduate, whatever word you like to use. I like to use the word graduate, but you use the word whatever you want, right? So now what you are doing is you're using a portion of that death benefit while you're living instead of you having to leave it to all of your ungrateful children. Or am I the only one that has ungrateful children?
I'm hoping they'll be grateful someday.
Yeah. I'm 57. I'm still waiting. No, I'm kidding. My kids are good. As a matter of fact, my daughter, her name is Hannah Kesler. And actually, Hannah, she's 25 years old and she travels and teaches the same thing that I do. She's like a chip off the old block, man. Go out and all right, go out wherever you get your podcast from. Go to the Money Multiplier podcast. And my daughter has, I think she's up to like 160 episodes now, records one every single week. Her podcast about 8-9 months ago, they went live on iHeartRadio. Every week she records one. Actually, she would be a great guest for you guys to have on, and you would be, I'm sure, great guest to be on her podcast as well. So her name is Hannah Kesler, the Money Multiplier Podcast.
Love it. Shout out Anna.
Yeah.
Okay, well, this is a great concept. JP, what do you think?
Oh my gosh! I mean, a lot of stuff to take in. I've heard this concept get thrown around in our office actually a few times, Brent. You'll be happy to hear that. So we've got a couple agents that have mentioned it. I've actually talked to my financial advisor here locally, and he's mentioned it to me. So it does seem like we've had some folks mention it to us, and this is just nailing it down even further. So yeah, super interesting. Super interesting.
I'm telling you guys, it is a game changer to build, keep, and create wealth. Even if you never call me or never do anything with me at all, go out and research this concept. Go research it, do your due diligence. It is a game changer. I mean, and don't take my word for it. Go and Google my name, the Money Multiplier, and look at the hundreds of people that are out there with testimonials and success stories of how this has totally changed their financial life. And I'm also going to throw out there chrisnaugle.com, Naugle. Remember, Chris wrote the book with me. Go out and follow everything that Chris is doing as well that's related, to this concept. And yeah, there's just tons of information to go out there and look at.
Yeah, I think we really need to look further into this, JP. I'm very interested as well. Chris Naugle came and spoke at our real estate meetup with Gary Cassidy's group.
Really? Okay.
Yeah, a couple years ago. So yeah, I do remember.
Oh, wait a minute. Okay, so that was in Mansfield, Ohio, right?
Yeah. Yep.
I was supposed to go to that event. Chris Naugle took my airplane to that event. I let him take my airplane and my pilot to that event. That's right, Mansfield, Ohio. That's where it came back to me from. I remember that real estate meetup. I was supposed to be the one talking, but I couldn't do it because it conflicted with another event. So Chris went down there and did the event. That's right. Yes. I didn't know that was your event, but it was in Mansfield.
That's right. Yeah, no, maybe it's meant to be, man. Maybe it's this concept sitting here knocking me right on the head saying I should be doing it. It's right in front of my face. And I'm the guy that hasn't taken action yet, to be honest with you on this one. But yeah, here it is reappearing once again. So I'm definitely gonna dive in, Brent, and super good talking with you, man. If we do it with anybody, it's gonna be you, man.
Mm-hmm. Well, I appreciate that, guys. And again, I'm here to serve. So anything I can do to serve your community, and again, just remember the book. Just like send me an email, Brent@themoneymultiplier.com. I'll send you the ebook. Or just go on our website, themoneymultiplier.com. Watch my full presentation. If you go to the website, it'll say watch Brent now. Go watch that full 90-minute presentation. And also, I think you can get the ebook from there too. I don't know where you click at, but you'll figure it out. Right, the audience will figure out how to get there.
More importantly, can I borrow the plane and the pilot when needed?
Yes.
Well, I mean, yes. I mean, I can't say no because I have let people take it before. I just had a buddy I live in a neighborhood down here in Port Orange, Florida. The reason I live in Port Orange, Florida is because I live in a fly-in community, right? We have an airport runway. I have a hangar attached to my house. It was an old Navy base. Anyway, John Travolta used to live here. A lot of people know it from where John Travolta used to live. A lot of the NASCAR drivers live here. Some basketball players live here. So I'm really into aviation. Yeah. But yeah, so like a guy last week, he said, hey, anyway, I got somebody to go pick up in Alabama. So the southern Alabama, can I pay for the plane and go and do it? And I said, just pay for the fuel and you can go do it. But yeah, man, that's what we use our plane for, is to travel around, do business. We teach, right? I was teaching 50 to 70 live events a year. And my daughter's out teaching. Chris Naugle's out teaching. So that's what we're using the plane for, is to travel around and share this message on this powerful concept.
Brent, what's the cap on before you have to open another one?
Oh, yeah. So like, it's not necessarily a cap. So let's say here, I'll give you an example. It's a great question. So let's say you wanted to start your first policy, I'm just going to use a random number of $1,000 a month. Okay, that's what you want to put into the policy. So, all right, the way you can pay that is $1,000 a month, $3,000 a quarter, $6,000 twice a year, $12,000 annually. And the thing you can do is always reduce your premium in the future. You can always lower it by at least 60%. So the $1,000 a month could go to $400 a month the next year, and then it can continue to lower and lower and lower if you want it to. Most people don't. They end up adding more. So that is that one policy, because that's how you started it. So that is a policy contract. So let's now say that the thing you're doing is you're trucking down the road and you're like, man, this is working really good, even better than Brent told me. And now I want to put $2,000 a month in. Well, it's okay to put an extra $1,000 a month in, but you can't do it in that policy contract, because when you started that contract, you told the insurance company, hey, this is what I want to put into it. Now, yes, you've got about a 10 or 15% flexibility. So maybe you could go up 100 or 150 a month, but you can't double it. You can't go from 1,000 to 2,000, or it'll become that thing we call a mech. So that's when you say, hey, I'm going to start a new policy. Now, I will tell you that 91% of my clients that have been with me a year or longer have more than one policy. 70% of those start another policy before the first year is even up. So it's very, very common that you're going to start another policy, because at the end of the day, the thing you want to do is you want your premium and income to equal. So let's just hypothetically say that you make $100,000 a year. Eventually, you want to have all $100,000 a year that's coming into you as income going into that policy. And it doesn't matter how your income is coming in. It could be active income from the job that you have, your like W-2 job. It could be passive income from your real estate investments. It could be your investment income from anything you haven't invested in. It could be a check in the mail from grandma for your birthday, right? All that money you eventually want to get into that policy, because you want to get it into a place, okay, which is in the policy, where the thing you've done is already paid tax on that money. See, what you want to do with your money is pay tax one time only, get that money into a tax-free growth rate environment, and get the government out of your hair. And now it's building, all the growth buildup is growing and building tax-free in that tax-free environment. So you're never going to pay tax on that tax growth buildup, because you're never going to withdraw from the policy. You could if you wanted, but you're never going to withdraw. Instead, what you're going to do is take policy loans. You're going to continue to take policy loans, and then eventually, it's not an if, but it's a when, you die, pass, or graduate, because we all have an expiration date. We just don't know when it is. At the time of your death, now the death benefit goes to your beneficiaries or your family, whoever you elect as your beneficiaries, tax-free.
Boom.
The game changer, man. It's totally changed my financial life. And listen, all shout out to Nelson Nash, the guy that wrote this book, Becoming Your Own Banker, the late Nelson Nash from Birmingham, Alabama.
Beautiful.
Changed my financial life. And all I do now is I just teach what he taught me. Anyway, have you guys heard, I know you're in the real estate world. Have you heard of Pace Morby?
Yes.
So Pace is a client. Pace actively uses this. He has us on lots of his not podcasts, but his webinars that he does, teaching and talking about this concept. So primarily my daughter and Pace work really closely together, but Pace is all around the country teaching this as well on his platform.
Yeah. We don't know Pace, but we know of Pace. The sub 2 guy.
Yeah.
Big sub 2 guys. So
I think we're onto something here, JP.
I think so too. It definitely sounds like it. So
hey guys, I'm here to serve. Anything I can do to serve you and your community, man, let me know.
All righty. Well, thank you, JP. John Pavlansky, JP for 3. Appreciate you and your time. Thank you, Brent Kesler, themoneymultiplier.com. You can check out Brent there and learn more and get signed up and have better financial literacy and do better with your money. Because these are the type of things they don't teach you in school, right, Brent?
They don't. No, no, no. They do not teach you this in school.
Yes. When they say formal education will make you a living, self-education will make you a fortune.
Yeah. Well, again, so like college conforms you, right? It just teaches you how to conform. I'm not big on college education at all. I mean, unless you have to have a college degree to be like a doctor or a lawyer, I'm like, man, I'm not buying into the college whole scene. I know I just pissed off a lot of the listeners, but I can tell you, my daughter, go research what she does and look at the wealth that she's created through this concept and using it in her life. She has no college, so even my youngest son is a pilot for NetJets. He didn't go to any college to get his pilot. I put his ass in my plane, and I hired an instructor, and he got his private ticket, got his instrument ticket, got his commercial ticket, got his multi-engine ticket, went down and did his type rating. No college whatsoever, and 23 years old is, he's flying jets around for NetJets. So my oldest son is a property manager out on North Captiva. No college whatsoever. I had to go back and got my GED back when I wanted to go to chiropractic school. I went to the counselor at chiropractic school and I said, hey, I want to become a chiropractor. The counselor at chiropractic school laughed at me. I said, what's so funny? He says, you can't go to chiropractic school. I said, what do you mean I can't go? He says, you don't have a high school education. You got to have a high school education to get into chiropractic college. I said, well, how do I get myself a high school education? He said, you got to go take a GED. I said, how do you do that? So I got a GED.
Love it. Fantastic. Hey, you do what you got to do. And yeah, again, you cannot beat self-education. That's where you find the true value, teaching yourself concepts like this. So once again, thank you, Brent Kesler. Thank you, JP. Check them out at themoneymultiplier.com. Everyone, thank you for watching the Dream Huge podcast. Remember to like, subscribe, and share. And as always, remember the rules. Work hard, never give up, and dream huge. Let's see the guns, Brent. Yes. That's right, baby. Have a great day, everybody. Thank you, Brent. Thank you,
All right.
JP.
Thank you so much for having me. I appreciate it.
Yep.